Title: This Crypto Project Made Teenagers Millionaires Overnight, an educational documentary. According to publicly available interviews, financial reporting, and historical blockchain data, this documentary examines how a cryptocurrency project led to sudden wealth among a small number of teenage investors. The story is presented for educational purposes only and does not promote speculation or investment advice. In the early 2010s, cryptocurrency was a niche technology discussed primarily among developers, cryptographers, and online communities. According to historical records, Bitcoin had only recently emerged, and many alternative cryptocurrencies were experimental in nature. In 2013, a new digital asset known as Dogecoin was introduced. Public documentation shows that the project began as a light-hearted experiment inspired by internet culture. According to the creator's public statements, Dogecoin was not originally designed as a serious financial instrument. At the time of Dogecoin's launch, the cryptocurrency had little monetary value. Blockchain records indicate that the token traded at fractions of a cent. Mining the asset required minimal computing resources compared to Bitcoin. According to interviews published years later, some early participants in the Dogecoin community were teenagers. They became involved out of curiosity, interest in technology, or online culture rather than financial planning. Public interviews indicate that several teenage participants acquired large quantities of Dogecoin through mining or early purchases. In some cases, individuals reported investing sums equivalent to a few hundred or a few $1,000s. At the time, there was no indication that the asset would experience significant price appreciation. According to contemporaneous reporting, Dogecoin was widely viewed as an internet novelty rather than a long-term investment vehicle. Over the following years, Dogecoin remained relatively obscure. According to historical market data, its price fluctuated modestly, and mainstream financial institutions largely ignored the asset. Many early holders did not actively trade their tokens. According to later interviews, some teenagers stored their holdings without a specific exit strategy, unaware of any future valuation changes. In 2020 and 2021, the cryptocurrency market experienced a significant expansion. According to market analysis, retail participation increased rapidly, driven by social media platforms, online communities, and broader interest in digital assets. During this period, Dogecoin received renewed attention. According to verified reporting, public figures mentioned the asset in social media posts, which coincided with increased trading volume and price movement. Blockchain data confirms that Dogecoin's price increased sharply during this period. According to historical charts, the asset rose from fractions of a cent to levels exceeding 70 cents at its peak. As a result, early holders with large quantities of tokens saw the paper value of their holdings increase dramatically. According to interviews conducted by major media outlets, some individuals who acquired Dogecoin as teenagers reported portfolio values reaching into the millions of dollars. These outcomes were not universal. According to financial analysts, only a small subset of early holders maintained their positions through the full price increase. Others sold earlier or lost access to wallets, a risk common in early cryptocurrency adoption. Public interviews indicate that some teenage investors experience sudden wealth without prior financial education or planning. Several individuals stated that they were unprepared for the psychological and practical challenges associated with rapid financial change. According to tax professionals interviewed in public reporting, sudden cryptocurrency gains created unexpected legal and financial responsibilities. These included tax obligations, asset security concerns, and regulatory compliance requirements. Some individuals reported seeking professional guidance after realizing the legal implications of their gains. Others stated that they learned about financial management through experience rather than formal training. Market data confirms that Dogecoin's price later declined significantly from its peak. According to historical charts, this volatility affected many holders differently depending on when assets were sold or retained. Some early teenage holders, who converted their assets during peak periods, retained substantial wealth. Others experienced reductions in portfolio value as prices adjusted. Financial educators note that the Dogecoin case demonstrates how digital assets can produce extreme outcomes over short periods. According to experts, the combination of low entry cost, viral attention, and market speculation contributed to rapid price movements. Importantly, no court proceedings or regulatory findings concluded that Dogecoin itself was fraudulent. Public records indicate that the project remains operational and openly traded on multiple exchanges. The experiences of teenage Dogecoin holders have been cited in academic discussions, financial media, and investor education programs. According to educators, these cases illustrate both opportunity and risk in emerging financial technologies. Analysts emphasize that early adoption alone does not guarantee success. Timing, risk tolerance, market conditions, and personal decision-making all influence outcomes. According to verified interviews, some individuals use their gains to fund education, businesses, or long-term investments. Others reported challenges adjusting to sudden wealth or managing public attention. These outcomes vary widely and should not be generalized. According to financial experts, the majority of cryptocurrency participants do not experience similar results. The Dogecoin phenomenon also influenced broader discussions about financial literacy among young people. Public commentary suggests that access to digital assets has outpaced formal education in personal finance. Regulators and educators have since emphasized the importance of understanding risk, taxation, and long-term planning when engaging with digital assets. According to public reporting, the story of teenage Dogecoin millionaires remains an exception rather than the norm. It is frequently referenced as an example of market unpredictability rather than a repeatable strategy. No guarantees were made and no outcomes were predetermined. The results observed were shaped by timing, market dynamics, and individual decisions. This documentary does not promote investment in cryptocurrency. It presents a documented historical case based on public interviews, blockchain data, and verified financial reporting. The story demonstrates how emerging technologies can produce unexpected outcomes, particularly when combined with internet culture and speculative markets. In conclusion, according to public records and verified reporting, a small number of teenage participants in early cryptocurrency projects experienced sudden financial gains during periods of extreme market volatility. Their experiences are now used for educational purposes to illustrate both the potential and the risks associated with digital assets. This documentary is intended solely for education and analysis. No conclusions are drawn beyond documented facts and verified sources.